Welcome to the ScaleUp Valley podcast, where we bring the best founders and investors to help you scale your business from 1 million to 1 trillion. Today, we have a very special guest. Her name is Lena, the founder and CEO at Brite Payments. Lena, welcome to the show.
Thanks so much for having me, Mike.
It's a pleasure. And you have an amazing career. You have been at Klarna. You have served also as a CEO of the consumer fintech company listed in the Swedish stock exchange, and now leading your own company, Brite Payments. But better than myself, it would be great to get to know your story and to share it with our community.
Yeah, no, I'm very happy to share, of course. It is true. I haven't done much else other than fintech. That really summarizes my CV quite well, and mostly with a focus on payments. But as you already said, I started my journey in the space in 2010 when I started at Klarna, which is, of course, now a rather well-known brand here in Europe and beyond. But at the time, it was a much smaller business. And I started out doing marketing Klarna, did that for several years. And during my time in Klarna, I also worked with their acquisition of a company called Support. So maybe the original account-to-account payments company in Europe, I would say, doing account-to-account payments even before that became a term, or even before PSD2 became a term, which is now very much the foundation of what we do in Brite. But yes, I did that for several years, very focused on sort of growing BNPL and marketing BNPL to merchants across Europe under Klarna's roof. And then after doing that for 7 years, moved on to Qliro Financial Services, which is another BNPL/consumer finance player based here in Stockholm. As I guess most people in the space appreciate, Stockholm is very much a fintech hub, so there's a lot of really cool fintech companies here. Qliro is one of them. Very different environment, a stock-listed business, actually a spin out of a large e-commerce group that had decided they wanted to have their own fintech that they had sort of incubated in the group that had then grown really, really nicely. So I moved over to Qliro first as a CPO, so overseeing product development and marketing, and then later took it over as the CEO. So that was my other big career step, I would say. I focused more on consumer finance, though, arguably. So we launched consumer savings, we launched consumer loans. So going more direct to consumer away from a B2B2C business model, which I've been doing prior to that. And yeah, during that period of time, I started I had the idea to start my own company, which is Brite Payments. So that's how things got their start.
And now we are all curious to know what is Brite Payments and where are you in the process of building your startup?
That's a good question. What is it that we do? So I started Brite in 2019 together with our tech lead who contributed the initial version or the embryo of our first product, basically. So we're fully focused on account-to-account payments, instant bank payments, if you will, is what we like to call it, because we're very focused not just on payment initiation, but on instant processing. So in short, what we do is we allow consumers to use their bank account to make a payment online or receive a payment online, always connected to a merchant. So we don't do peer-to-peer. It's always basically between a consumer and a merchant in both directions, so to say. So that means that we serve e-commerce retailers, trading platforms, auction houses, marketplaces, but also for the payout side, companies that want to pay consumers. So for example, that could be insurance companies that pay out consumer claims. It could be gig economy if you want to get a freelancer paid. It could be marketplaces, of course, if you're a seller rather than a buyer. We can facilitate that too. So those are the main money flows that we handle at Brite, and we do that now since 2019 at a total of 21 markets across Europe.
Wow.
So it's been quite internationally spread out at this point.
In terms of the business model, how does that work?
It's actually quite classic. So we contract primarily with the merchant. So we're also B2B2C. So back to B2B2C again. And then we offer them basically a service that they can in turn offer to the consumers. We're always visible as a payment method. So we're an actual branded option towards the consumer, but for consumers, it's always free of charge. So we monetize solely, as most payments businesses do, on the fees that we charge our connected merchants.
Got it. And in terms of the stage of growth, any metrics that you'd like to share, funding, headcount, etc., so people can relate to where you are in the process of scaling your company?
Yes, absolutely. I think we're a classic scale up. At this point, we're just over 80 people. The business is 3.5 years old. And we're getting to a point, we've actually been really cash efficient. So we haven't done huge funding rounds. We've raised in total a little over 10 million euro to date.
Well
But
done.
have been very, thank you. It's given where we are in the space, I think a lot of the competitors have done larger rounds, but we've been able to run quite fast with this nonetheless. So we haven't had to raise more really to get to the stage where we are, and we continue on that journey right now.
This is a topic that I'd like to double down a little bit at, because I think it's also great to celebrate raising less and being more sustainable and having stronger unit economics. Again, nothing against raising more money. It is really a strategy and a potential path. What I'd like to see is that there is also a path going into that direction, and it helps with the correction that we are seeing today as well. So let's kind of discuss or highlight some of the takeaways that you had in the first chapter of your career with Klarna. So it definitely a company that's scaled a lot, one of the most successful in the European ecosystem. If you'd have to kind of highlight some of your takeaways or lessons learned, what would you say about that stage of your career?
Now, they have done extremely well, and it was a very interesting environment to grow up in, so to say, because it really was basically my first fintech job, of course. So that's where a lot of my learnings come from. But one of the takeaways that I had is, I think what they've done really well is they've recruited really good people, really ambitious people, with a really high intrinsic level of motivation. And that is definitely something that I think when you look at any business, you typically have a set of individuals that make a really big impact on the business, and those tend to be the ones that have like innate motivation, that really want to not just spend time, not just go to work, but actually do something during their time that is meaningful, and they're more engaged. And that is one of the things that I think is quite vital to success. Klarna has had a huge amount of really, really good people, and you see them in the ecosystem now. In Europe, many of them have moved on to be founders, or they have very senior positions in other fintechs. And that's something that we're trying to replicate. So we've been, I think, for the stage where we are as a company, we've probably hired an unproportionate amount of senior and experienced people. It's not rare and bright to find somebody that's been in payments for over a decade. So that's one of the things that I think matter. And it allows us really to skip some of the mistakes that we all made in the first generation, sort of say, of fintechs. We like to call ourselves second generation for that reason, because everybody's already been in a fintech before. And since that was really the first wave, we did try things that didn't work, and it's good to bring those learnings. So that's one takeaway I would say for sure.
Yeah. And it's great to see first the European mafias starting to pop up, or even more than to pop up. I think that we are already, as you said, maybe on almost the third generation in the European ecosystem. But it's definitely great to see that movement and that experience. And so if we move into kind of the second chapter, where you go into kind of a different environment, leading a stock listed company. So what do you like to kind of share there for the ones who are listening, who are thinking about scaling up and are not there yet, and want to prepare themselves for that stage of the business?
Yeah, that's a very interesting question. I think initially when I went into that environment, I probably applied a lot of the learnings that I had from the first 7 years, so to say. But some of the things that I think are that I would say are valuable. We operate in fintech, obviously. That's a regulated environment, right? There are rules and regulations. You can't just bootstrap the way that you can in other startup environments, perhaps. And I think it's one of the vital things is to really pick the areas where you cannot cut corners, because it will come back, and handling sort of certain areas of the business in a solid way and recruit the right talent so that you don't have to go and backtrack, I think is really valuable. So it's one of the things that we've done at Brite, but it's definitely something that I saw in that environment, because if eventually say that you do want to IPO, there's obviously requirements that come with that, not just on a financial level, but also other areas of the business, and having things in order at a good level already then, and having had that all through, I think it's very valuable, because otherwise you're going to spend so much time cleaning that up and trying to get that in shape, when really you want to be focusing on the business and then speaking to investors and prepping for that stage of the journey. So I would say that's perhaps the main thing. Then personally, having been in high growth tech businesses my entire career, I would say that sort of becoming overly corporate for me personally is never a good thing.
Right.
Because that's basically where I think younger companies come in and they can take market share because they're just more agile in the way that they decide, and they just move more quickly, and they maybe take more risk. And that I think can be quite healthy if you're competing with a corporate environment. So you want to make sure that you don't become too corporate. But in certain areas, unfortunately, you have to do the boring stuff to take it to that level.
There's something interesting there that we never discussed it on the show, which is typically we compare kind of the builder role with the scaler role here on the show. And I even like to see myself as more a kind of a early scaler role. I like to help companies to go from 1 to 20 million. And when they start becoming too bureaucratic, too corporate oriented, from let's say the 20 to 50 or 50 to 100, then it's maybe more a mid scaler or a late scaler profile. So we can start even segmenting the builder and the scaler, right? The builder is typically from 0 to 1, and the scaler from 1 to 100. There is a lot of layers to go through in terms of skills and competencies. And it's also another sign that the ecosystem is maturing when we are seeing more people specialize in specific stages of growth of a company, and having a lot of fun helping a company go from 1 to 10 or 10 to 20 or 20 to 50, 50 to 100, and in specific verticals, as you were saying. Cool. And also the role of the CEO that you were talking, it's exciting that you are putting a lot of emphasis on the importance of hiring the right people for the right stage of growth. Definitely kind of recruiting, fundraising, also being close to customers, understanding the market, and that communication strategy. Some of the main roles of the CEO, a topic that I'm also very passionate about. And yeah, let's jump into your current chapter. If you would like highlight the first few years of Brite, what has been some of the lessons learned getting back into the 0 to 1 stage of building a company, and now going into the scaling up stage where you are now?
Oh, that's yeah, it was really, really interesting, because I basically started the company after already having climbed sort of the corporate ladder, which is maybe not your typical founder story, right? So I went from basically being in the most corporate setting I'd ever been in my entire career to being basically down to employee number 1. And starting from scratch. And that was definitely a change, because of course in my previous role, I was very fortunate to have a range of very senior people working with me that I could focus on, who would then run their teams. And then I was back to basically rolling up the sleeves and doing everything myself. I, as a person, am one of those people that I like to do things myself, and I usually have to make a conscious effort to withdraw myself and ask others to fix things, because I do have the tendency to just, I'll quickly do this myself, which is not great when you're running a larger company, right? So it suited me in that way. But of course, your leverage is limited. There's limited hours in the day, and you just don't get as much done. So I think that was what's perhaps the biggest change. The other piece, I think, was that before you really have a team, you're quite alone with your decisions, and you're quite used to, especially in Scandinavia, being a fairly how should we say, consensus-driven society, where you do tend to discuss things more. Not discussing with people as much as I was used to in my previous role was also a big change. But I got started. Actually, we sat initially in an apartment here in the center of Stockholm in one room, which was sort of a co-working space, because somebody would basically rent it as a room, but it really wasn't a professionally run co-working space in that way. So we all sat in one room and got started basically getting together the first version of the product. And one of the things that we then did was that we started speaking to potential customers really, really early. We actually had a number of customers already lined up when we launched the product. And we had sort of gotten those lined up even before we started building, really, because we had identified what we thought was the gap in the market. And that really helped. And that's actually the explanation as to why our funding journey has looked the way that it has, because we've been able to generate revenues from a fairly early point onwards, compared to maybe what you normally see when you scale a fintech, which obviously you have to sort of front load the development of the actual product, and you have the licensing and all of that regulation that you have to abide by is easy to bootstrap. So that was basically really something that defined the first couple of months in the business. A lot of customer discussions, understanding what the challenges were, everything from, consumer facing processes, but even back office. I'm sure that'll be familiar to a lot of people. And that was, of course, quite different.
And very customer driven since day one, and being able already to generate revenues since day one. This is quite impressive. Quite amazing. Any insights or tips there for companies who are maybe thinking on more on the fundraising front and forgetting that you can also fund your startup with your initial customers? Again, we are not saying nothing around huge funding rounds. There are different paths to scale up a company, and we have seen bootstrapped companies that did an amazing job, companies who raised a lot of capital also did an amazing job, and companies who didn't raise a lot but kind of have a mixed approach like the one you are proposing here. So raising some money but being very sustainable from a unit economic perspective. Any insights there on how to start very customer driven, right?
Yeah, no, for sure. I'm obviously not the master fundraiser. You're going to find competitors of us that have raised 10 times as much as we have. But one of the things that I have found to be extremely useful is that we've had a fund here in Stockholm that has funded us from the first day. And they have been with us. They actually had an hypothesis about the space already before we started. So that was really helpful. And they have been, and that will probably be my number one tip. They have been extremely interested in what we do in the business, and therefore also very patient with us. So I have, compared to, I think, a lot of other founders I speak to, I have spent minimal time having to manage expectations. I have spent more time basically discussing in a very constructive manner what the challenges are and how we can solve them together. So basically, I would say our funding investor has been quite instrumental also to our initial customers. So that aligned beautifully because they had also seen a gap in the market. They had already spoken to businesses that had a need. So they made a lot of introductions for us early on. And that has been sort of that for us, that really, really worked nicely. I think the worst thing that you can do is basically at a too premature stage, get an investor that has a lot of demands on the structure of things. Because not because it's not a valid question to ask as an investor, but rather because it's difficult to deliver in the early days. And that has also allowed us to be customer focused because they have given us a lot of leeway. So what we have done from a funding point of view, we have rather done a number of smaller rounds whenever we saw traction from the same funds. We now have 2 funds in the cap table rather than doing one big round, which is also why we've never actually announced a funding round ever.
Got it.
And that is, I think to some founders that may seem counterintuitive, because I know it's, of course, I mean, it's always nice also for the team to celebrate when you've done a big funding round, where we have, rather been quite under the radar and have just been focused on like building product and taking it to market. So a slightly different approach. And for us, it's worked well. So to that end, I would recommend it, but obviously every business is different and every business has different funding needs.
Absolutely. So and maybe there is kind of 2 topics that I'd like to have your thoughts about. The first one, it's all about how are you able to compete with the legacy players, with the big boys in these segments. And of course, I'm sure that you saw there an opportunity and there is a way, and you are doing it with success. And then also another direction that we were already going there, which is if you feel any issues about competing with other tech players who are more funded than Brite, and how do you deal with that? But let's go where you would like to start, and happy to go in a direction.
we can start with the initial sort of legacy, the initial one you brought up, the more sort of legacy players in the market. I mean, overall, the account-to-account payment space is very new, but there is a decisive moment in account-to-account that is the regulation, that is PSD2. For everyone who's maybe not familiar with that, basically what PSD2 is a regulation that sort of forces banks to provide standardized APIs for consumers to initiate payments from, basically through third-party providers such as Brite. And there are players that were already on the market prior to this regulation, but the product would have been built differently than if your starting point is an API provided by a bank. And given basically that sort of course, any business over time has technical debt and accumulates basically legacy. We sort of had our situation was a positive one from 2 points of view, or 2 different viewpoints. One being that we were able to build on the back of PSD2 and on the back of these APIs, which has an impact on the infrastructure of our product, and hopefully solve us migration projects that I think everybody who's been in tech for a while has seen and knows are painful. So that's one aspect. And the other aspect is that, for example, our products are entirely cloud-based. They're basically on 2019 level and onwards, not 2009 or 2005. And that has been helpful in the way that we design products, because obviously in between those time spans, different things have happened. So we are also, for example, building mobile first, because we were started at a point in time when the majority of traffic was already mobile. In previous businesses, we were watching the shift from desktop to mobile. So you're basically trying to adapt your product to be mobile friendly, which now sounds, of course, archaic, but that has had a bearing. So that's basically, I think, maybe from a product point of view, that's probably our biggest sort of proposition that we offer compared to legacy players, I think, is on that side. And when it comes to competing with startups that have had significantly more funding than us, perhaps clarifying one thing here is that we probably could have raised more if we had wanted to, but we haven't needed to. So that's the difference. So it's not that we didn't want to, or we haven't really had a need, because we have been well-funded and we continue to be well-funded today. But of course, you do wonder as a founder, if you see a competitor that is on a similar scale in terms of similar size of people or revenues, you never really know, but you suspect, then you do, of course, question yourself when you see them raise really large rounds if you're not running fast enough. And that is sort of, I think, a constant discussion from a competitive stance is sort of, okay, are other players going to move faster than us just because they have access to more cash and they're maybe over-investing in certain parts of the business that we have basically constraints in. And let's just say, I was more nervous about this maybe a year ago when the market looked very different. And we were discussing basically, okay, maybe we should just do a big round and really speed things up. Now, since earlier this year, now in 2022, things have changed. I'm really happy with how we did things, because we're one of the few companies, if not the only one, perhaps, I don't know, but definitely one of the few companies in our space that hasn't had any layoffs. We continue to hire because we haven't over-recruited, because we haven't taken big bets. And I say that, with the utmost respect for everybody else who has unfortunately had to do layoffs. So it's not that I want to sort of say that we've been smarter than them. Not at all. That's not my point. But we've been doing things differently. And fortunately, that has now led to a situation where we haven't had to do those tough decisions. And we continue to grow. So now I feel more comfort around the stance that I chose back then, when I had maybe more doubt around that a year ago.
Yeah. It's not an easy moment for those companies that are seeing corrections on their valuations and to raise a B round or a C round with this market correction and needing the cash to keep scaling. It's a tough moment to be in, and that's why we always come back into the fundamentals. We should be raising to be able to speed up the pace of growth and not raising just to be able to keep the business moving forward, let's say. So
for sure.
No,
but in all fairness, of course, I mean, I also have respect for that. Not every business model has an immediate path to revenue.
That's
I
a
mean,
good
there
point.
are
Yeah.
fintech business revenue. I mean, there are fintech businesses, right, or business models that primarily need consumer acquisition. We are B2B2C. If you're a direct to consumer business, it is different.
Exactly.
And there's just no way that you can make that profitable basically overnight. It doesn't work that way, right? So there are business models for who, raising initially is absolutely essential. And in all fairness, when we built the product and we got licensed for a payment institute here, or payment institution, I think is the correct term, here in Sweden, that is also an investment. And that is not something that you can just sort of, do by, living on a very limited budget for a couple of months, and then you just sort of get that done. I mean, you do need external investors. So depending on where you are also in the life of your business, I guess it differs. But I think we are very fortunate to have come to the point that we have at this point in time, when basically the macro environment changed. Others may not have been as fortunate, but yeah.
Definitely. And of course, there is another challenge is when we start very customer driven, is because we are so dependent on those early revenues from customers to sustain operations, that we might be more open to the temptation of developing a product that would fit into those early customers, but might be not very scalable, and we start creating a Frankenstein on the product perspective. Right?
So very true. Absolutely. And also, of course, I mean, in the beginning, I think for any company that has a limited customer portfolio, customers also realize, of course, that they are unproportionately important to you. So you'll get more of those demands to become a Frankenstein, as you phrased that. So that's a very good point, I think.
I think on the bootstrapping layer, that's the most difficult thing to balance, or one of the most difficult things to balance. How are we able to not be so dependent on those early customers, even them knowing that we are, right?
No, precisely. And what's the right balance between sort of building for scale for the future and then prioritizing revenues in the short term?
Good point,
because
as well. Yeah.
I think in a corporate environment, as to sort of what you were asking about earlier, my previous role, it was much easier to take decisions, say, okay, you look at whatever revenue that customer brings in, this is the demand that they're having, and then you can just basically just decide and say, oh yeah, okay, it's not worth it. We're not gonna be able to build that, sorry. We're not gonna be able to prioritize. And it really wouldn't matter in the bigger scheme of things. When you're an early stage startup, or even as a scale up, and you know that customer accounts to revenue that maybe is equivalent of 3 or 4 FTE that you can finance on the back of that, you think a little bit harder. It's not as easy to just look on the paper and say, oh, no, not going to do that. So that is also, I think, a change in mindset, and trying to balance that, I think, is a challenge for anybody that is not in a super scaled up mode as yet.
Right. Something that is interesting is that it seems clearly that your areas of strength, or where you started your career, are around marketing and products, and then your evolution into becoming a CEO of a listed company, and then of your own company. It's good to have this kind of product intuition in the early days, and also understanding how to market the product. This helps a lot. And then it's much more kind of the transition on how can we become more sales driven. I would say maybe kind of covering the revenue machine that we like to talk about, the CS, the sales, the product, marketing, those disciplines. I imagine that this helped you a lot, kind of starting up your own company, having a domain of those disciplines. Do you agree with that? Sorry, I'm going free flow here, but was just thinking about it.
Definitely. I think one of the things that was most helpful, I think, in terms of looking at different areas of the business, was actually when in Klarna, for example, you basically watch the business being built in real time, more or less. That's how I've described it before, and I still think that that's very much true. So what you see is you get a really good sense of the challenges in each and every area of the business, just because you're so close to it. Because obviously at that stage of my career, I wasn't responsible for a customer service department. I mean, in my last role, I would have had a COO who was running customer service. So I would have had discussions around, for example, KPIs for customer service. But where I perhaps learned more was in the early days, when you sort of see that being built, and you see sort of, the mistakes that can be made, to how they're being corrected. And that is definitely something that has been really, really helpful. And that is not my strength, not at all, as you very correctly outlined. My strength is much more on the marketing, sales, and product side than in perhaps operations or finance. But it's helpful to have seen it so that you can compensate for that not being your home turf as a founder.
Right. Something that is quite unique and that I'm very proud to see is the fact that you are a female leader, founder, and CEO and operator as well in the past in the fintech sector that is very male-driven in a way. Did you face any kind of issues? What has been your experience leading a company as a female leader? We all wish that this is not a topic at all in our future episodes, but I think it's also good for the women leaders that are listening to us, and even for the male leaders to understand how we can help more female founders and CEOs to succeed. Right?
No, very good question. I think I would say that, of course, it's hard for me to benchmark because I only have one perspective, and that is the one of a female. So it's hard for me to say how I would have been treated differently. What I can say is that early in my career, I definitely had more situations where I felt like, okay, would this have happened, or would this person have said this if I were a male? That has become increasingly rare now that I've become more senior. To the extent that it barely ever happens now, but of course I still witness it sometimes in other situations, maybe outside of my own business. And I've been fortunate in the sense that I've had really amazing managers that I've worked with, and they've been very supportive of me. And I think that has been key throughout my career. I've never actually reported to a female, which I think is a shame. I've never served in a board with another female. I've only had male managers. So it's been, I can't say that, I've had a strong female promoting me, but I do believe that it helps to have stronger females in your perimeter. And one of the things that I'm really happy with here at Brite is I think we have a pretty good range of really amazingly senior women. And some of them have openly said that they came to the business because they wanted to work under a female CEO. And vice versa. Like you have people basically that, it's been really, I'm very, very grateful for that, really. And I see the layer below as well. So they in turn recruit more females. That's sort of, And I think there's a lot of questions around sort of, not just for what has your experience been as a female founder and CEO, but also sort of how can we promote more women in fintech? And I personally very strongly believe that just hiring great women is perhaps the best way. And then obviously it's more easily said than done. But it's not sort of, there is not an industry-wide plot to keep women out. It's not that. Sometimes I feel it can be portrayed that way and it becomes sort of a confrontational sort of discussion, which I really don't think it is. But just being more conscious of it, I think is a really good start. And then, of course, I would love to see more female founders as well. That's definitely something that the numbers are correct. And the debate is correct to address it.
And it's good to see also seeing more female investors, which also helps to create more female founders and CEOs. The female investor side. And what you said, it's really important to have more gender parity on the founding teams and especially on the leadership teams, because of course it's difficult. When you are looking for a co-founder, it's someone you really do well with and that you are up to go through the ups and downs of building a business. So you are not seeing if it is a man or human that you are working with. And again, it's 2 or 3 people. It might be more difficult to have gender parity there. But then at the leadership team layer, where you already have 7 people or 5 to 7 people on your leadership team, then I think it becomes a choice if we want to have a more diverse environment. And again, not to go through the typical arguments that we all know, that diversity and thinking from different lens helps us to bring better solutions to the table, right?
No, for sure. I think one of the things, though, that is tricky, especially about fintech, is that, and I think people don't really want to talk about it, but it's just, for me, it's such a clear challenge, is that fintech companies, by definition, have a really high share of engineers in the company. I mean, you're not really a tech company if you don't have a sizable chunk of employees that are actually working on the tech, right?
Right.
And what I said just now about basically hiring more females, that works really nicely in a lot of different areas. It really doesn't work in tech because the talent pool isn't there. The talent pool in tech is not a 50-50. Female, male. So if I bluntly put, even if I were to hire every female engineer that crosses my path, or if my CTO would do that, we still would not we would still not have gender parity. So I don't think we're really going to reach that until we see basically more females graduating basically with engineering or development basically degrees. And then I think we're going to see true gender parity. But until we're there, there's plenty to work on in the other areas, of course. So it's not an excuse for anything, but just an observation that I think very often goes unsaid.
And that's a good observation that we also discussed here on the show. It also depends on the vertical. Maybe fintech typically would be more male oriented in a certain way, but health tech, for instance, we see much more gender parity around the founders. Maybe because it's a topic that women also are more attracted to, not only because people don't, the male or female don't have the opportunities, because they are more passionate about certain topics than other topics, certain verticals than other verticals, or certain functions than other functions, right? So
I would even go as far as to say that I know a couple of really cool health techs here in town, and most of the founders in that don't actually come from tech. They come from health related industries. So maybe they were doctors before, or they would have worked basically more closely to health rather than tech. Versus in fintech, I think fintech founders more often stem from fintech from before, if that makes sense, basically.
Yeah,
I think that could also be a part of it.
Good point. And this is the moment where we get into the final question and answer to wrap up the format, to wrap up the show. So let's start with the three self-reflective questions. The first one, if you would have the opportunity to meet Lena at the beginning of Brite and have a coffee with her, what advice would you offer to your younger self?
I would probably tell myself that to stress less, and that things will develop as long as you get the right people on board. I think that was a personally very big relief for me when I got more senior people around me that shared the vision of the company and that helped carry it. Like you don't have to do everything by yourself. There will be people that will be there along the way, and they will make all the difference. I think that would be the number one advice, probably.
Love it. And what are you the most proud of on your journey so far?
I'm going to have to say it's perhaps the same thing. It's perhaps I continue to be amazed by the people that join us. I'm really proud of some of the people that we've been able to get on board and the impact they've made. That is perhaps the number one thing, I think. Then in terms of achievements, I'm also proud of that we haven't had to do a lot of organizational adjustments. I think by comparison, we've been really stable. And because of where we are in fintech today, people are more senior. If I go back 10 years in my career, we were all in our late 20s, basically. Nobody had a family, or very few of us. We were all crunching hard.
Correct. Good point.
Now, it's just a different time. Now the majority of my staff have children to come home to. They depend on a business being more stable. And I'm proud that we've been able to provide that stability. That's also something I'm proud of, I would say.
This is a great value proposition that sometimes we usually have this kind of discussion. If you would go into a VC-backed company or into tech, you can't have a life. So you need to prioritize. If you want to have a life, you need to go into the corporate world. And it's good to see that finally we are seeing an option to still do what we love, and at the same time still be there for our families, and also work on our family plans or on our personal plans, for even if it is without family, right? So good point. Worst advice ever received?
I think the worst advice I've ever been given is that I have been told that I should decrease my pace, not my pace of speaking, but rather if I get a question and I provide an answer, I should spend more time basically making the individual who is asking me feel like I'm really thinking about the question, rather than basically prompting an answer straight away, which I tend to do because I I'm a fast talker, and I tend to think about things a lot. And I think the underlying logic was that it would help people feel appreciated more so than improve the quality of my answer. And I thought that was it somehow sort of landed with me in a way where I should basically try to be less intellectual. And I thought that was a very awkward advice that I really can't at all sort of see the value in, to be honest. I mean, I personally quite appreciate if people sort of give me the impression that they've thought about something that I'm asking them, rather than saying like, I will think about this.
Right.
So that would perhaps be the one that I've been given by somebody very senior, that I felt like, can't really subscribe.
Good one. And now the resources that you recommend. Your favorite book, business or non-business? This is to get to know our founders here, so you don't need to go just business.
Yeah, this is funny. You're asking the right person, because I actually have a university degree, not just in business, but also in literature.
Wow.
So yeah, really odd, I guess, for somebody in tech, but I studied both literature and business.
Well done.
So I've read a huge amount of books, actually. But one of my absolute favorite books that I've recently reread is The Unbearable Lightness of Being, which sounds incredibly intellectual. It really isn't, but it's a beautiful book. It's a lot about interpersonal relationships between people. It goes very deep into relationships. And if you are somebody that appreciates basically that ultimately everything around the book basically boils down to people, I think it's a book that you will appreciate. And I tend to say, when we talk about Brite, I tend to say that we really only have two assets in the business. One is tech, the other is people. So if we're not basically doing a good job with our people, then we have very little left, really, because we're not a manufacturing business. We don't have a hall somewhere with lots of physical assets, right? It's only tech and people.
Yeah.
So that would be perhaps my favorite book on a personal note. And then there's obviously business books that I appreciate, but in all fairness, I tend to listen to them as podcasts more than reading, because it suits my lifestyle better. I can listen to them whilst I'm on the plane or while I'm commuting to work. So there's a great number, and I think there's better people to recommend them than me, perhaps.
Got it. And favorite movie or series?
One of my favorites that I've recently, and this is owing to the love of literature, that I've recently rewatched, is actually his Dark Materials, by Philip Pullman, who's a wonderful author. And I'm watching it basically together with my niece, and I really recommend it. It's a beautiful production.
Awesome. Original recommendations and new additions to the list, which is great. Favorite podcast excluding this one?
I have previously talked about a number of different fintech podcasts, but if I'm brutally honest, I listen to news quite a bit. So I do like the Stories of Our Times by the Financial Times. It's something that I really like. And I also like the Economist podcast. And I listen, that's typically, if you catch me sitting with my headset doing deep work here in the Brite headquarters, that's usually what I listen to. It's either the Economist or Stories of Our Times for the Financial Times.
Love it. Lena, thank you so much for making the time to be with us. It was really a pleasure to host you on the show, and all the best in the next chapters, scaling up Brite. And you are always welcome to come back to share your lessons learned as you scale your company.
Thank you. It's been a pleasure. Thank you really for inviting me. So great talking to you. Likewise.
And to our community, thanks for being there. As you see, we keep bringing you the best of the best to make your life a little bit easier from 0 to 1, 1 to 10, and 10 to 100. See you soon, and keep scaling.